Hello and welcome to this new market review for the second week of April 2026. As I start my market review and analyzing the market for the week, I always start with the economic calendar on Forex Factory to see what we will have on that week. So on Monday, there will be no news, economic calendar. On Tuesday, there will be the core PPI, which is high impact news, which is the red folder expected. And then there are few medium impact news on GBP, Euro, USD, GBP, and CHF, NZD. So these on Wednesday, they will be medium impact, which might not affect the market volatility, or it will not generate much of liquidity, but we will see how the week progress. Then on Thursday, there will be high impact news on AUD, which is the employment change and unemployment rate dollar. Then there is the GDP on pound month on month. And then there will be also some couple of medium impact news. Then on Friday, there will be FOMC numbers pick, which will not have much of impact. It will be late in the evening, like 2 hours before the market close. So there will be no focus on that. So my focus trades or my trading week will start from Tuesday. I might looking at the market and identifying some good trades during London session and the New York session on Tuesday. On Wednesday, how we will be progressing. On Thursday, the focus will be on AUD currency, anything that is related to AUD, which will generate high impact movement or volatility movement. Then there will be also I might find some good trade on, which is the British pound. So now let's head on to the chart and see if we can identify some liquidity points and find some structured trades. So as I start, dollar index, US dollar index, the DXY. So this is my levels from last week. So this is my level from last week. And this is the weekly chart. And as you can see, the dollar or the dollar index took the liquidity from the previous weeks over here and then pushed lower and created a doji weekly chart. So this is a week of doji that the market took the liquidity and then pushed lower, came back, retested this level. It could give us a good indication that the market is moving lower. And then the market start moving lower than next week, which is the last week, analyzing this market. So what I do every week or by end of the week, I adjust these two lines. So this is the previous week low and this is the previous week high. I adjust it like this. So my weekly bias for this week, I want to see if we can break the weekly low, grab some liquidity from this level over here, because this is an inefficiency point, which is the fair value gap on the weekly. So this candle is the fair value gap, the weekly. Let's keep it like this. So I want the market at least so this is my idea. If we can have the dollar to go a little bit up, give us a confirmation and then move lower, take this fair value gap. It will be a good indication. So let's check the daily chart. So this is the daily chart. So I'm hiding my indicator. So I have some indicators which are related to a price and time that I'm using. But the most important is to see the price movement itself from the chart. So as you can see, there is a gap here on DXY. This gap is very important because it will attract the liquidity. So it will be like a magnet. The market will probably move to fill this gap before it move lower. So this is the plan. So from Tuesday, we will be watching the market, how it progress, and find a good entry if the market start to move lower first. So if the market moves like this on Monday or Tuesday, grab the liquidity and goes up. So this will be the target. So we will be a buyer below and we will be targeting this gap. But if the market goes higher and fill the gap first and start to move, then we will find a confirmation for the price to move higher, fill the gap, and then give us an indication to come lower to take this liquidity. So most of the times there are two scenarios when you are trading. So you should not lean to one direction when you are trading, because at the end of the day, we are traders and we need to find clues in the market, and we need to find a good liquidity points for the market to move, because at the end of the day, we are trading other traders' mindset. I'll go how it will move. So you should not lean to one direction over the other. So this is my direction for this week. So I will be looking for the market to either take the liquidity first by coming to this fair value gap and then goes up, take this liquidity void, or it could come up first, take the liquidity and then push lower. And we will see, because there are geoeconomic also news that comes from the US. So we need to be very cautious on that. Plus, if we from last week, so I am having some indicators on my chart, which I have created, such as engulfing candle. So from last week, if we want to review, so last week on 4-hour chart, the market moved lower, took the liquidity above. On Monday last week, the price came to this level, pushed lower, came back to this order block level, and then start pushing lower. So on Tuesday, we had the major trade. Once the price took the liquidity, it moved in sideway or consolidation. So they were not of a move. So once you analyze that, because I only analyze the DXY for my direction when I'm trading other pairs that directly correlated to the DXY, such as GBP/USD or USD GBP, such as GBP/USD, Euro/USD, AUD/USD, NZD/USD, USD/JPY, and USD CAD. So these are the main currencies that I am focusing on. So let's go to GBP/USD, and this is my trades for last week. So let's start again. For this again, if you see, there were some SMT over here on weekly. So the price of last week on British pound US dollar weekly chart, the price the previous week reached this order block level. I was expecting that the price will come, take the liquidity of this liquidity over here, and then start that structure to move higher. So, and then if you see, this is major expansion move. As we are analyzing this week, we have to adjust the lines. So this is previous week and previous week low. So what I'm expecting for this week, I would like to see the price move lower a little bit, retested this level before it head higher. Okay, so this is the first scenario. Or if the market start moving higher at the beginning of the week, it might come at least target this level and then start moving higher. But these are major move. So ideally, the price need to come or retrace little bit lower, so it give us a chance for the market to start moving higher. And this important number, this is a round number, so we might see a reaction at this number. So let's go to the daily. So in the daily, I have, this is the 2 weeks high on British pound US dollar. And in the daily, previous day low, which is Friday low, grabbed this liquidity and started moving lower. So day number one, which was Monday, we were unsure what the market will do. But after the price broke the structure, then we got a good chance on the daily that the price will come to retest this level before it move higher. So if we go to the 4-hour chart, this was a clear setup. On Tuesday, the price came and have this massive candle. It retraced, it had some retracement. So it retraced a little bit or pull back a little bit before it push higher. Use them. You have to let probability and you might lose because the stop loss will be much bigger. So this is it on GBP USD and same thing. So I will be looking for the price because this is also order block over here for Wednesday. The price pushed lower, but it did not come to retest this fair value gap, which is very important. If we draw like this is fair value gap. And also this is the order block, which is, this is where smart money sold. And now it is an opportunity for them to buy at this level. So we might see this scenario. So either the price will push lower beginning of the week, so we could buy around this level, or the price might push higher first at the beginning of the week and then then it will give us a structure for the market to push lower, and then we will target this level again. Same thing on Euro USD. So similar structure, because Euro USD is 65% of correlated with the DXY, and GBP USD is around 35 correlated DXY, and they are closely correlated together with, so Euro USD with GBP USD, they are closely correlated. So that's why I trade one of these based on what are the structures. So if we start again with the Euro USD, I will be removing. So for last week, the price also had doji or doji candle similar to the DXY. So if we go back to the DXY, this is the doji. So going to Euro USD, this is the doji. The price came lower, took this liquidity and push higher. USD, it did not take the liquidity of the previous week, but GBP USD took the liquidity of the previous week. So that's why it had an SMT. And then if we go same thing on Euro USD, it has a big massive candle, which is an expansion candle. So again, I'm adjusting the lines. So this is previous week high and previous week low. So the weekly candle is bullish, at least come little bit or pull back lower before it move higher. Start the week moving higher, taking these liquidities and give us a structure to move back into the range. And if we go to the daily chart, same thing. I am looking at this fair value gap, bearish fair value gap, to see if the market will come to retest this level. And again, this is another fair value gap. I want to come to this level and start pushing higher if we want to complete this buy curve. So this is the buy curve. Let's see how the market will perform. Another thing that I want to analyze is AUD USD, and which is the main currency, as we will be having a news on AUD or Aussie dollar, be having this employment change and unemployment rate announcements, and it will be during Asian session. Be able to trade it, or if you are on that time zone, it might be good trade to focus on. But anyway, I don't trade the news, but I see what will be the impact and what will be the structure of the after the news. So on AUD USD, same thing. So we will start with the weekly chart. As you see on the weekly chart, see how the market push lower only to retest this fair value gap, taking the liquidity of the previous week low and then start pushing higher. So it is also inversely correlated in the XY, and it has this big massive move. So if we will adjust these two lines, so I always have these two lines to check, because it is very important to analyze the chart on the higher time frame first to know your directional bias and to frame trade ideas based of the weekly and daily, of course. So the price took the liquidity here. It also took the liquidity of the high, 2x high, we can say. And then we want to see if the price is able to come to take this liquidity also of 4 weeks high. So let's see if the market will come or will be able to come and take this liquidity before pushing lower, or the market will have. So this is the first scenario. So I'm expecting the market to push higher. The market could probably push higher, take this liquidity, and then push lower back into the range, then push higher. So these are the two scenarios, the market. So this is my analysis for this week. And we want to see, so last week, the price took the low of last week or previous day, which was Friday, the 3rd of April, took the liquidity and started moving higher. So if we adjust that, you could take last week. So Monday, it took the liquidity below Friday low, start moving higher. Then it came, retested with this reversal candle at this level and start pushing higher. So if you miss this trade, there was also another trade, which is high high probable trade, a good confirmation that the price will resume moving higher. This is another reversal candle. So you had two chances for the price to come to your level. So this is the first chance, and this is the second chance for the price. And you can target the high of this. And then the price came, retested this fair value gap, but it still did not come to the 50% of this fair value gap. So I'm expecting the market to come to this fair value gap before it gives us another structure to move the price or continue moving higher. Or if the market start the week by breaking the previous week high, we want to see if we can have a structure for the market to come and we can target this fair value gap. So I don't want to keep this video long, or I don't want to keep this recording very long, because this is my first recording and I want to have a clear and precise way of analyzing the market. I don't want to complicate things. I want to show you how simple you can analyze the market. Adding any complication, you can keep it simple and you can trade professionally and you can make money every week. So this is my objective. I want you to understand the market as a normal person without complication, find a setup and trade like a professional trader. Find a setup, have these setups by having less trade per week, 1 or 2 trade per week. And with that, you can pass any funding challenges and make money every week. Do not overcomplicate things. Do not add indicators that are lagging and useless. You don't need anyone to tell you how the market will perform. So this is my way to show you how it is very simple to identify the trade for the week, and you don't want to listen to those market gurus who will tell you what you need to do. Keep it very simple. This is my objective that I want you to learn. If you decide to learn from me or any other one, keep it always simple. Identify your trades and setup and focus on those trades. News reporters to market gurus, those will track you back into losing or into they will delay your basically. So you don't want those to stop you from trading and making money. So this is my objective, and this is the first recording. So let's see how we will progress. And again, we'll see you next week with another market review. This is Maytha Al Shamsi, and from my platform, Fundex. Take care and see you next week.